Hi, everyone. Welcome to another fantastic Spendesk webinar. I'm Patrick from Spendesk content team, part of the marketing team, and I'm really excited to be joined today by my colleague Alfie, who's leading our US expansion or our go-to-market efforts in the US. I'm going to let Alfie maybe introduce himself a little bit further in just a second, just so you get to hear his voice. But we're really excited to talk today about reconciling card payments and really how to make that faster, more efficient, more accurate as well. So we'll get into all of that in a second. But first, Alfie, why don't you just let the audience know a little bit more about yourself?
Yeah, for sure. Well, today's a special day, Patrick. We actually just announced our 100 million euro Series C at Spendesk. So I know we've got the team celebrating. So it's a big day for us. So super excited to be recording this on today of all days. But yeah, my name's Alfie. I joined Spendesk around 20 employees a few years ago. We're now about 300. So I've seen the company growing over that time. I initially joined to help look after the launch of Spendesk in the UK market, and I'm now currently in San Francisco helping do the same thing in the US.
Excellent, and we're really happy to have you. Obviously, we've had to do this at a US-friendly time zone, or a US/Europe-friendly. For anybody who's not aware, I'm at head office in Paris, so I don't get to talk to Alfie every day. This is a special occasion.
Yeah, it's very true. We should definitely try and do these time zones more often.
For sure. Well, look, I think we need to get right into it because we've made a pretty bold claim. I think that we believe that companies should be reconciling card payments 10 times faster than they typically are today. And it was really you who brought this to my attention, or brought this idea to my attention. You suggested that we have this conversation. And so maybe, why don't we start with just a really basic premise, which is that traditional credit cards, bank credit cards for companies are a problem. And maybe not everybody is aware of what particular problem or problems they're causing. So perhaps you could just tell us a little bit more about what you're seeing when you're talking to companies every day.
For sure. I mean, if we take like a step back and then look at every company in the world needs to spend money, right? There's often different ways that companies can spend money, from paying an invoice for a recruiter for $10,000, having an employee pay out of their own pocket to buy lunch and get reimbursed, or buy a SaaS subscription, whatever it is. There's lots of different ways companies need to spend money. And credit cards are one of the most popular ways of handling company spend. And I think that one of the issues that we've seen with credit cards is they aren't really built for finance teams, or the operations and processes that finance teams need to put in place. And when you sit from the perspective of a finance person, there's certain outcomes that they need to get to, which is close the books at month end, reconcile those credit cards, categorize them to the general ledger codes, capture the receipts and make sure they're book kept very well, report back to the board. There's all these kind of outcomes. And ultimately, these payment methods, they don't really account for that. So that means that finance teams in the back end have to build processes around that, which take a long time and are very manual to get to those desired outcomes. So there's this notion of where the payment methods themselves are very separated from the processes that need to go on in the workplace to do the job that a finance person needs to.
And I think one of the things that I was surprised to learn, although maybe a lot of people aren't, is that just comes from the fact that company credit cards are really just the same as personal credit cards, but assigned to companies. Like they were just invented essentially to provide a service to companies, but there was no special R&D behind them, no extra work. They were just, let's take personal credit cards and give them to companies.
Yeah, exactly. I mean, before I started working at Spendesk, and before I was really using credit cards or payment methods in the workplace, for me, I didn't really think of it like in your personal life. You use a card, you make a payment, you forget about it. Maybe you're use a budgeting app like Copilot or Mint, whatever it may be, and that's probably about as far as it goes. Most people don't really keep the receipts on their personal transactions, but realistically, when you come into the business world, payments require an audit trail. They need to be tracked. They need to be associated to certain general ledger codes. There's all these kind of things that have to be taken care of. So it's kind of baffling that the way that people spend money in the first place, these processes aren't accounted for. And I think the feeling is, no one go. I study accounting and finance, right? And I didn't study accounting and finance to then go to work and have to manually reconcile credit cards. Like we study this sort of stuff and have a background in this so that we can do something with it, so that we can take that information and make business decisions with that, so we can power and drive our businesses. We don't want to be sitting there doing these kind of low value added tasks that just take time. So the fact that every credit card, takes hours and hours to reconcile at the end of the month is not fun.
What are the particular aspects that a traditional company credit card is lacking that cause it or cause them to eat up so much time for the finance team?
So when you think of a traditional credit card, the value proposition by the banks or the credit card providers is really credit or rewards. Their main goal or their business model is to have as many payments going through their credit cards so that they can make money off of interchange. And for those who aren't aware of what interchange is, whenever you go to Starbucks, for example, to buy a coffee, when you buy that coffee, there's a point of sale system that you put the card in, you make the payment. Someone has to pay for that. And those payment processors charge a fee to the merchant, to Starbucks. So on every transaction, Starbucks is paying a couple of percentage points, and those card companies get a percentage of that. So they're really in like the volumes business. So everything they're trying to do is just to get more spend go through their platform. They're not trying to create value for the finance teams who are having to manage these payment methods in the business environment. So that's one kind of context as to how it's come about. But that has secondary knock-on effects. When you have a credit card that has no built-in controls, then you have a problem in the business environment, because you're having employees that are responsible for spending the company's money. Like we were saying just a minute ago, when we spend our own money, we are spending our own money. So we're going to be pretty damn sure that whatever we spend is what we want to spend it on. And that may not be the case, obviously, when you're spending someone else's money. So to get around this problem of control, how do you make sure that the right person is spending the right amount of money on the right things? Well, with a credit card, you have to then give that to only a select few people. So a very, very common business practice is to, let's say you have a 100-person company, and then you say have 5 department leaders in the company. You'll give one credit card to maybe the department leaders, like the head of marketing, and then that card gets shared out every time a payment needs to happen. Now that's part of the big part of the problem, because that means that the end person who makes the payment, the finance team doesn't know who that person is. That's not written down anywhere. That's not on the card statement that you're going to get. The reason for that payment, who actually approved it, all of that process, that just doesn't get captured anywhere. So that makes obviously reconciling these payments at the end of the month and then associating that to the right place very, very difficult. It also means that when you don't have the end employee who needs to make the payment as the person with access to a payment method, it means that there's multiple people that have to touch every transaction just to bookkeep it in the business world. You have an employee who holds the receipt, who has knowledge as to what the payment's for. You have the manager that approved it, someone in the finance team to then reconcile it, someone to check over those. So you end up having 3, 4, 5 people touch every payment, which is crazy. It should just be, as soon as you make a payment, connected to the GL codes and done. And so that's kind of where we see most of these issues is just the way that people implement these credit cards within the business environment.
So tangibly, what we're talking about is moving from essentially personal credit cards that people just use in their day-to-day life, but at work for businesses, otherwise known as company credit cards, to something that's a bit more controlled, that actually tracks payments as you go, that keeps a log of all these things, and I think more importantly, records who's making the payments. That's a really critical element.
Yeah, I think so. Where Spendesk, where our vision of how payments in the workplace comes, it's really this idea of traditionally there's the payment method and then there's the software piece or the process. So the process historically has either been manual. So, you give these cards to 5 people, you then, pull out the card statements, reconcile them in Excel and do some, VLOOKUPs and what have you. And that's a manual process. And then there's other tools that you have that are software pieces that you can maybe insert those cards into. Things that we've seen before, Expensify, Concur. There's hundreds of different expense management tools. But fundamentally, there's this payment method and then the process, which are just separated. And that in itself, whether it's a manual process or it's through software, as long as it's separated, you're always going to have a subpar process, and there will always be negative externalities that come from that. Our vision at Spendesk is to first forget the payment method. We start with the goals of the people in the finance team, and we say, what do these people need to achieve? We want to control spend before it happens. We want to know exactly what that's being spent on in real time, not a month plus a couple of weeks after the month end close. And we want to be able to bookkeep that with all of the receipts without having to do lots of manual work. So we start with those kind of end goals, and then we work backwards. And we say, okay, let's build a platform first, and then we'll build the payment methods around that. So we are really thinking of this as a software plus the payment methods in one place. And when you combine those two things together, it enables you to create a simple and easy workflow that's completely designed around the needs of finance, rather than trying to serve a fulfilling principle of just volume of transactions going through a credit card, which has historically been the case.
I think the part that will be interesting to a lot of people is that kind of connection between the two, because we obviously began by talking about traditional credit cards, and a lot of people will have heard us talking about that and thought, yeah, we know this. We've at work, we've got purchasing cards, we've got P cards, so we've already got a smart card. It tracks what people pay more or less, and it makes it, I can take a photo of my receipt and it's pretty easy. With a lot of those, in a lot of cases with those tools, they make life easy for the spender, the person holding the card, but the impact on the finance team may still leave a lot to be desired.
Absolutely.
We agree.
Agree. Yeah, without doubt.
I mean, what's the difference between one of those and what you're talking about here with Spendesk?
So I think for example, if you take some of the software pieces that they act more as layers on top of a credit card, it's almost like putting a plaster on top of a wound. It's not really curing or fixing the problem, really. It's not addressing the root cause of the problem, which is just the fact that people are sharing credit cards to make payments within the companies. What you need to do is you need to empower every individual with access to a secure and controlled payment method, so that from the transaction level all the way up to the individual, the team, department, and geo codes, you can track everything. Let's give you a concrete example. If you have a card, let's say whatever it is, an Amex card, a Capital One, any other bank card, it really just doesn't matter. But if you take any credit card and then you put an expense management software over the top of that card, well, that piece adds value in the effect that it enables the employee to kind of enrich that information with enrich that transaction with some more information. So, okay, this was, for the dinner with Sally and John, and this was for, a client meal and so on. So they can do that, which is great. And that's helpful, right? But what it doesn't do is it solve that whole operational piece of the process. It still means that someone is sharing that credit card amongst their team. So yes, it means that now me as a manager who has a team of 6 people, I'm now having to upload that information into these expense management tools for a team of 6 people. And so I still have to go and chase them if there's no receipts at the end of the month. I still don't know what that dinner with the candidate or the client was for and who attended. So it's not solving the root problem, which is the fact that people are sharing these payment methods because they just weren't designed for business spending. It's just adding this kind of layer on top. That's the kind of the biggest issue that we see with those sort of processes. And that then has obviously knock-on effects to the rest of the business. When you have more and more card spending, and this is a trend that we're seeing, but particularly in San Francisco, in New York, in these kind of places where there's more and more tech companies using credit cards as a fundamental part of their business. Bigger items are being spent on cards. It's taken over more as a percentage of the business spending because it's an easy payment method. So that means that there's more and more spend going through credit cards, which has less visibility on where the spend is going. And that has a knock-on effect. How can you do accurate forecasting? How can you spot efficiencies in your process if you don't know where that spend is going? A very typical example is, we had this actually at Spendesk in the early days where we were all having LinkedIn premium accounts and in the sales and the customer success teams. And we noticed that there was all these kind of individual LinkedIn premium accounts popping up on Spendesk because it's, now companies are operating a lot more, bottom up. There's product-led growth companies that are operating in this way. So software and tools are adopted from the bottom up more and more. But we spotted this through Spendesk and we were able to see, okay, we've got 15 different LinkedIn premium accounts. Why don't we actually just have one enterprise account and then we just save 20, 30, 40% on the spend that we have? How on earth would that be possible to do if you don't have that kind of visibility into the spend that you have? And so it's these sorts of things that have these knock-on effects going down.
But so concretely, because I'm not sure that everybody listening will really understand what we're talking about kind of from a product perspective, I guess. Concretely, if we had at Spendesk those 15 LinkedIn premium accounts on, say, 1 or 3 company credit cards, one of the main issues is we just fundamentally wouldn't know who owned those LinkedIn premium accounts. We know that we had 10 of them assigned to sales, but we would actually have no idea who they were and whether those people even still worked at Spendesk, honestly. And so
you might not even know that they were 10 different ones. If you have a very you're work a lot in the marketing team, right? And so you would have seen all ad campaigns on Google and Facebook. It's very common to do lots of different campaigns across either different regions or keywords or whatever it may be. So if you have 10 campaigns on Google and you have one credit card being used for all of that, you're going to have one campaign can have multiple payments in a month. So let's say you've got 50, 100 payments in a month. There is absolutely no chance that you're going to be able to track which campaigns they belong to, because you're just going to see Google with lots of different dollar amounts on. That's going to be obviously a nightmare to track. You'd have to do that outside the tools, or it takes a long time. Those are the sort of things that make business decisions very difficult when you don't have a proper process put in place.
So on that online advertising example, that's a great example, because there we do have pretty much all of our advertising spending goes through one person. We have a manager in charge of our advertising spending. But of course, we have lots of different campaigns. And so when he's making those payments, he can first assign each payment to the correct budget, because it might not all be marketing. Some of it is, employer branding or recruitment. We're trying to attract talent. Others might be communications, which we'd put separately from marketing for our purposes. And he's able to assign those different budgets. And then within that is able to tag them as well with the specific campaign name if he chooses to do so that we can actually go back and say, this is exactly how much was spent on that campaign in that month. And that came from this budget. And then we can attach that to the KPIs that we had, or the metrics that we've got for that campaign.
Exactly. I mean, for everyone that's listening, we've spoken, I guess, a little bit about the pretext as to, why these problems arise and why it takes so long to actually reconcile these cards at the end of the month. And we've spoken a little bit, theoretically, as to how we approach some of these problems. But fundamentally, what is Spendesk and how are we approaching this? So I've mentioned already, we got the software piece and we built those payment methods into that. But the easiest way to explain it is we get rid of shared credit cards by having one platform and replacing those cards with a Spendesk login. So you take a Spendesk account, you invite all your employees onto that through a login, and when they have their own login, you can put them into teams, you set up their controls and spend policies, and then they'll have access to payment methods. So for example, there's single-use virtual cards for those kind of one-off payments like a book on Amazon. We have recurring virtual cards, which can be used for those payments that happen each month, like the Google ads or the LinkedIn premium subscriptions. And then also physical cards. So I want to buy a coffee in Starbucks. I can't use a virtual card in a point of sale system. So I need a physical card. But the point is they have one login, and that login is going to be associated to the employee. And then every transaction, then it knows it's this employee, it was for this team, and it belongs to this general ledger code, because these all your general ledger codes are then linked into Spendesk. So we can automate when we get a payment, we know from the merchant, there's thousands of codes that these merchants send us in the back end. You will never see this on a card statement. But when you buy coffee in Starbucks, the back end, we get this information. And so we can set these rules and automate the code into your general ledger codes. So you make a payment and it's connected to your general ledger already. And that visibility of, okay, Alfie bought a coffee from Starbucks and it was for a candidate meal, instead of a customer meeting, for example, that is known in real time. So it's this idea, when we talk about 10x faster card reconciliation, why is it so quick? It's because it happens in real time. We do the setup before when you first open an account on Spendesk and you make a payment, it's connected to the GL. And that's where the kind of value comes in that process. There's a whole other load of other, positive benefits of that, from payment control and so on. But, we're really focusing on that reconciliation piece. So how do you get that information quickly? And so that's how we do that. And then enables you to do a couple of things. When you have the old method, where there's 5 cards held by department leaders, that makes it really difficult to scale your business. Some people will have one card held in the finance team. As your company grows, you become that kind of friction point, that bottleneck. And that's not good. That's not good for the person that is the bottleneck, because that's stressful. You've got to approve all these payments and you've got to do everything yourself. And so when you grow, you need to be able to delegate. And so having a platform like Spendesk is fantastic, because you have central control over the whole process as the finance team. But you can then delegate things like approvals to team leaders. And you've got the platform that's doing the automated GL coding and receipt capture. So you stay in control the whole way up as you grow. But then the other stuff gets delegated either to Spendesk or to team leaders. And that allows you to kind of build that foundations where you can then grow.
I think that's one of the hard things instinctively to understand when we first talk with people about Spendesk for the first time, is by actually giving more people access to funds, but in a controlled environment, you almost need less trust, or there's less room for abuse, or even unintentional abuse. I don't mean to say that employees are malicious. I mean, mistakes happen. But I think instinctively we think, well, if we've just got one card and we give that to the financial controller and they make sure that every payment is what it's supposed to be, that's actually more controlled. But as soon as that card gets shared around, that system is broken, because you don't know who's actually making the payment and where it's gone. And this is different because we are tracking the person who makes each payment, even if the approval is coming from above them.
Exactly. I mean, it's funny because when you actually look at the behavior itself, fundamentally, nothing's changed. We're not actually doing anything that special. Someone needs to make a payment. Someone is going to then say, can you make that payment or not? That person should have the authority to do so, and they will then approve or decline. The employee then gets access to a payment method. And in the old way, this all happens over, verbally in the office, pre-COVID, or maybe over Slack or via emails or on the phone. That process is the same. And then they get the card details, and that's either the physical card or on a Post-it note or written down somewhere, which is terrible for security, but that happens and is common. And then they make the payment, and then they either forget that number or they have that stored somewhere, and you see the problem, right? But the point is, someone needs to make a request. They make a request, someone approves, they get the access to a payment method, and they pay. And then there's this whole follow-up after the payment happens. So that's the natural cycle of a payment in the workplace. That will never change. All Spendesk is doing is putting those behaviors into a kind of controlled environment where you can track everything and you can make that more scalable. you log into Spendesk, you make a request via the platform that goes to your manager to then either be approved manually by a human being, or we can automate that approval through the spending policies on the platform. You get the virtual card, you make the payment, all the follow-up after it happens in real time because we're capturing this information, and that's it. So there's no fundamental change in that behavior. So yes, absolutely, there's this inertia, we're doing this in a certain way. We don't want to empower people with more payment methods because there's this association that more access to payment methods means less control. And that is the complete opposite case with what we've been able to accomplish at Spendesk, which is why it's so exciting.
Yeah. And it doesn't, I think the other thing, some people are even worried that more access to payment methods means more payments, means more money spent. But again, this is the whole key thing, is that budgets are set, limits are set, however the user wants them to be set. And in fact, you again have more control over where those precious company funds are going.
Well, the crazy thing is when you start doing this, the trend is, well, actually now you see everything. Now you know where stuff is going. You see all those subscriptions that you've had that you don't use and that you're paying for the last 6 months to 12 months. And then you can cancel them, and then you can make smart decisions. Like, okay, if everyone is staying in the West End hotel, then maybe we should get like a corporate thing. So it allows you to identify these kind of insights into your business spend to then drive more cost savings. So having that visibility really can help bring costs down and bring your overall spend down. It has the reverse effect in effect. And again, unlike a traditional credit card company where they just want you to spend more money, we want you to be able to achieve the end goals, close the books, report internally, find those insights, drive savings within your company, and really add value towards the decisions that get made in the day-to-day business through visibility.
I mean, when you put it like that, it makes perfect sense. What do you think is maybe, I mean, you talk to people every day about this. What holds people back from diving in? Because when we discuss it like this, everything sounds perfect. There must be reasons why people don't choose to join Spendesk. What are one or a few of the kind of key points of hesitation?
Well, Spendesk specifically, we are really working more like a debit card than a credit card. So we don't offer credit on Spendesk, meaning you connect your bank to Spendesk, and Spendesk almost acts like a secondary bank account. Unlike your actual bank, which you would never give access to all of your employees, you can give everyone access to your Spendesk account because it's a controlled environment. But there will be funds that sit on Spendesk, and every time a payment's made, it will draw it down from your Spendesk account. Now, that means it's not a good fit for everybody, right? There are certain companies that will they won't like the going from 30 days paying after the event on a credit card to having to pay up front. So we're really focused on those kind of companies that have a significant operational issue around their spend. So higher volume of transactions, there's lots of reconciliation done, tons of missing receipts. It's just a real pain in the backside. Those companies that may have like one or two pieces of spend on AWS for $200,000 takes 5 minutes to reconcile at the month end, and is much more value to have that on a credit card, that they're going to stay on the credit card, and that's absolutely fine. We add kind of value really on that operational and process side around scaling and making payments in a controlled way.
I suppose, I mean, I've kind of run out of questions because I think we've done a really nice job of talking around or explaining the point of Spendesk and what we're trying to achieve here. Is there anything that you think people need to understand that we haven't talked about yet, or anything that you want to sort of leave people with before we wrap up this conversation?
I think overall it's really this evolution within accounting and finance as to the role that these people play within the business, and it's a really exciting one. It's really less of a case of doing the T accounts and doing the debits and credits and the reconciliation. These kind of things are super important, but they take a lot of time, and being able to free that time up means finance teams are becoming real strategic players within businesses that are driving insights and becoming more and more important in that aspect. And so the role is naturally evolving. And I think that's super exciting. And it's not just in spend management in the area that we operate in, but there's lots of innovations going throughout finance teams and different tools, account receivables and lots of other stuff that's driving this. But that means there's a huge amount of opportunity. We have outside of Spendesk, we've obviously got the CFO Connect community. If anyone that's not heard or seen of that, you can go to type in on Google CFOconnect.us, and you'll see this. It's a community of over 5,000, I think it's 5,000 plus now, finance members worldwide.
I think it's 6,000.
6,000 now,
yeah.
But it's growing quickly. So there's over 6,000 finance professionals worldwide. And so they kind of connect. There's private Slack groups. There's also regular webinars and live events and tons of free resources. We have the CFO podcast, which you're the host on. And we have lots of guests. So there's a really strong community. And it's something that we see more and more. It's like the value that these people are adding in their business is evolving and changing over time. So if that interests you, get into the CFO community, learn from other people, have to hear from you, and I think that's just a great resource to use going forward. And I'm super excited to see what's going to happen over the next 10, 15 years in the space. I think there's going to be a renaissance.
I couldn't agree more. Just very concretely, if you'd like to join CFO Connect, really the easiest thing is just Google CFO, the letters Connect. You can't possibly miss it. Otherwise, Alfie, I want to thank you very much for joining me and for speaking to us all on this webinar today. It's been a real pleasure, as always, to see your face and to speak with you. And hopefully we do it again soon. You too, buddy. Great to see you. And congratulations again today. Yeah, huge day for Spendesk. But thanks for joining us, everybody. Bye. Yep.